market, 200 DMA gone. Are markets oversold? Can they remain oversold? Is it a time to go against the tide? Because it's not for the first time we've gone below 200 DMA.
Morning, Nikunj. Looking at the overall structure, yes, we may remain in oversold trajectory for some more time as the buying intensity is still not that much great to counter the supply of FIs, and the significant sell-off from the FIs are uh, keeping everybody on the caution mode, and nobody is trying to buy. Though the most of the quality stocks are now available at very attractive prices. We are now at almost at 200-day moving average. Again, most of the portfolios are going to restructure, or again we could see some sort of selling pressure if we slip further below to 200-day moving average, because most of the fund managers also follow this 200-day moving average as a entry exit point. So I think that supply can again come in the market if we slip further below 23,500 level. Market structure is oversold. Both the indices, major indices, Bank Nifty are in the oversold trajectory for near-term to short-term perspective. But still, there is no sign of reversal. There is no, sign of reversal from any of the large cap stocks at this juncture, which could hold the Nifty at current juncture. So I think maybe another couple of days we could see some more supply pressure. This is again very important level to watch for 200-day moving average, and it's a one-way sell-off in last few weeks. So I think there could be some pullback, but again maybe we could break 23,500 first, and then maybe Nifty could try to settle down around 23,350 kind of level, and then some pullback we could see from those level, because most of the stop losses are placed at this 23,500 strike price levels, because most of the traders are following this 200-day moving average. So I think, and Bank Nifty is almost now near to 200-day moving average, which is also likely to test that level. So until the Nifty not crosses 23,800 in any kind of pullback, I think the trend is still on the weaker side, and maybe we could slide further to 23,350 level. That level we can see in next couple of days. And for Bank Nifty, I think the 200-day moving average, which is placed at around 49,700. So I think that level can be tested by Bank Nifty also. So I think still there is further more sell-off we could see in the next couple of days.
Naresh, what should one do with these so-called trader patronized stocks now? Vodafone, Yes Bank, Suzlon. I was making this point I think 3 months ago that's where I smack trouble. When stocks fall, you don't want to be recollecting it and saying that, oh, I got it right. But unfortunately, in this case, we've got it right. I mean, these were stocks which nobody should have bought at the first level. But when they've reversed, they're down 50%. So what should you do now with the Vodafone, Suzlon, Yes Bank?
So out of all those names, Vodafone is something which has taken the largest knock. And there was hope when it started sustaining about 10, then went up, saw new fundraise, went up all the way to 1890. But moment it broke below the 10-12 mark, it was a breakdown in a major way. Same way with Yes Bank, the stock has been something which has not really bounced back sharply, which just saw a spike to 30 odd levels a year, almost 6-8 months back, and continues to drop. So still avoidable. The only one, if somebody wants to do bottom fishing, could be Suzlon, wherein the things have totally changed for the stock in terms of it's no more a high debt company, which it used to be for the last 10 years. And the stock has corrected back all the way to 50. So if one wants to take a risk in this, only Suzlon. Apart from that, I would avoid Vodafone and Yes Bank. Even if they were to bounce, it may not be a sharp bounce. But at 45.50, a risky bet could be Suzlon.
Let me just scan through some interesting names here. And yesterday, frankly, the delight was Swiggy. Himang Jani, I have a lot of notes on Swiggy. Everyone is saying Zomato is better. But Swiggy still went up on a day when everything went down, Swiggy went up, and it was not on expected lines. What do you make of Swiggy? And why do you think it went up yesterday? And do you think it will continue to go up? Hemang Jani.
Yeah, Nikunj, I think if you look at the current scenario, the appetite for the new age companies, particularly companies which are showing high growth in the current scenario, where majority of the sectors are struggling, there is a certain amount of appetite which is there. Of course, this was not reflected in the IPO per se, which did not receive very enthusiastic participation from retail and HNIs, and largely it was institutional participation that we saw. But I think at the end of the day, the theme remains quite strong, particularly on the Q-commerce. Food delivery also is stabilizing. And, while we are all struggling to find the pockets of themes where there is going to be a growth, this is one pocket which is growing at, let's say, 25-30% on a quarter-on-quarter Q-commerce and with reasonably good visibility. So I think that is what explains the interest in Swiggy, because Swiggy is at a considerable discount to Zomato, about 40-45%. And on majority of the parameters, there is a good amount of comparison that you can draw. And I do think that though yesterday's move was definitely a bit of a surprise, but even if you're looking at medium term or 1 year kind of perspective, if the stock stabilizes around the issue price or a little higher than that, I think the risk reward definitely is quite compelling for a 25-30% kind of an upside.
Right. Let's move on then. Let's talk about Eicher Motors, Eicher Motors earnings as well as what brokerages have to say. And Hemang, you have the management which is very upbeat and confident going ahead. But what's your take, especially when you talk about the two-wheeler end of the market? The four-wheeler end of the market is not doing that good. The commentary, however, they've been trying to actually instill a sense of confidence amongst the investors and consumers, but that's not how it's been transpiring. But what's your take coming in, especially for the two-wheeler segment of the auto pack?
I do think that after a very strong 3 year of growth phase, the auto sector is going to go through a bit of a slowdown. You can call it a cyclical slowdown or any other name. The fact of the matter is that on a higher base, there is a challenge to kind of get a good amount of growth, be it urban side or rural side. And we think that it makes sense to kind of cut down the exposure on the auto, because from the top some of these companies may have corrected, but on an overall basis they have given a very healthy returns. So I would certainly cut down the exposure, and if I have to choose one company across all the pockets, I think Mahindra stands out in terms of growth, in terms of product rollouts, performance and valuations. So I would definitely consider, either retaining or adding to some M&M if there is any correction. But overall, I am a bit cautious on the auto sector at this point.
Mahindra and Mahindra has managed.
If you like this video, then like, share and subscribe to ET Now.